We mostly work on the post-award of when projects are actually awarded, but we do have a small pre-award that we provide. Since we do the financial side of research administration, we also assist with helping college grant coordinators and faculty with budget development if they need it. Initially, you always want to work with your college grant coordinator. We do review and approve the proposed budget during the routing process. And then mainly what we work on then is the post-award, so the financial administration of the project and monitoring all the expenses to the grant after the fact. So really we're ensuring the financial stewardship of the resources, mostly the federal resources, and making sure they comply with university policies and procedures and assisting the PIs. A majority of our sponsored program funding comes from federal funding. That always comes with a lot of compliance. So compliance is really the effective management of the taxpayers' funds in order to maximize the project outcomes. And there's many sets of rules at play, and all of them need to be followed. And over time, because of fraud, waste, and abuse, some of these federal requirements have increased and become more stringent. In the last several years, the federal regulations, we also refer to them as UG or Uniform Guidance, has put a lot of emphasis on internal controls within the university. So they want to make sure as a university we have policies, procedures in place to make sure that we're complying with any of these regulations. And two, with financial management comes a lot of rules and regulations. And when we're looking at rules and regulations, there's a lot of conflicting rules and regulations and knowing which ones actually apply when. So with grants and contracts, especially federal cooperative agreements or grants, you have the uniform guidance that we follow. So that's kind of the base of the financial compliance, has the foundation of the rules. Or if you're working with federal procurement contracts, you also have to follow FAR clauses, which is federal acquisition regulations, so more rules to follow. And then within the federal agencies, they also have their own set of agency rules that you have to follow, and some of them conflict with what the uniform guidance says. So when we're looking at what rules we need to follow, we follow this order of precedent here. Some of the agencies, they have specific program rules based on what program is actually being funded. And then, of course, on top of that is the actual award and any special terms and conditions that are in the award. When we get the question of, is this an allowable cost, one of the first things we go to is the actual award to see what the agreement says. Within all of that, we still have to make sure we are following our institutional policies and procedures, as well as any public laws, those kind of trump anything that are part of the uniform guidance or in the award. So the uniform guidance provides these cost principles. In SDSU, we have a policy called Guide to Allowable Cost, and it helps the PIs, the department support staffs, dean, and even the grant monitors help determine what costs are allowable to charge to a grant. And a lot of times it depends. It depends on the situation, the program, what's allowable based on the award. Anytime you're charging a cost or an expense to a grant or project, you need to make sure it follows these three basic considerations of allocable, allowable, and reasonable. In order for a cost to be allocable, it either needs to be charged solely to advance the work under the agreement or in relative benefit. If a graduate student is working on multiple grant funds, their salary should be allocated between the grant funds that receive that benefit. You can't just charge a cost just because there's budget available. And in the uniform guidance, it says, any cost allocable to a particular project may not be shifted to another project just in order to meet deficiencies caused by overruns or for other considerations or for other reasons of convenience. So just because one fund may be overspent and another fund has a lot of money on it doesn't mean you can just move an expense over to that fund. It has to be, it had to have provided benefit for that project in which you're charging it to. Reasonable and necessary. So the cost needs to be reasonable and necessary to complete the project. Would it withstand public scrutiny? So if it wouldn't, you may want to reconsider your cost. But really, as the PI, as long as you can justify why that cost should be on there and it is reasonable, likely it is going to be allowable. For a cost to be allowable, it needs to be treated consistently in like circumstances. It needs to be reasonable and necessary, and it needs to be specifically excluded per SDSU policies, sponsor policies, or the agreement terms and conditions. There are costs that are generally allowable on grants and contracts. However, if a specific program says, you're not allowed to charge tuition admission to a grant. Most grants do allow it, but if a certain award says, no, you can't, then it is no longer allowable cost. There are certain costs that needs and requires additional approval or additional documentation. Typically, costs that look like F&A or that are hard to identify to a particular project are going to need additional documentation or justification. Usually the best places to put that is in your proposal, in the budget justification if it is something unique. But if it is charged after the fact and we're not sure why it's on here, you may have to provide additional information. Other things that do need prior approval from the sponsor and sometimes institutional approval from SDSU. If you're changing the scope of the project or objectives, change in key personnel, those people that were identified as a key personnel when it was proposed. The disengagement from the project of more than 3 months or a 25% reduction in time devoted. So as a PI, if you committed 10% of your time to the project, but then later when you're actually working on it, you realize that you're only going to be doing 5%, that's a reduction of more than 25% of what was originally devoted. So it would need sponsor approval or notification. And then certain things like participant support costs and subawards need prior approval as well. There are certain costs that are always unallowable. Obviously, costs not benefiting the project, alcohol, late fees charged to a grant. So if SDSU pays a bill late and we're incurring a $10 late fee because of it, well, it's not really the grant's fault that SDSU didn't pay that. So those types of costs can't be charged to a federal or to grants and contracts. Contributions, donations, the grant's usually for a specific purpose, so not for donating to other causes. Financial accountability, so why is this important? So first and foremost, need to be preserving the public and federal government's trust in the university by avoiding the mismanagement of funds, which ultimately could lead to penalties, negative consequences for both the individual involved and the university. Could be suspension and debarment or where you couldn't receive future funding. And we need to be stewards of the taxpayers' dollars because ultimately that's where a lot of this money is coming from. So the basic definition for compliance is following the rules at play. Some of the examples of some of the fines and penalties from non-compliance point out the Columbia University. This one kind of started in 2014. The Department of Health and Human Services, OIG, had an audit and they were fined the $9 million for mischarging grant funds. And then as you can see, the following years in 2016 and 2017, they incurred additional audits. So sometimes one agency notices that you're getting a lot of fines, they may want to look at it themselves too. So that's never good for the university and it definitely is a lot of work. Some of the common compliance items for budgeting as well as managing the award, risk areas, time and effort reporting. This is really our way of certifying that the amount or salary charged to the grant is reasonable in relation to the actual effort performed on the grant. So the sponsor doesn't want you charging, 50% of your salary to the grant if we're really only working on it 30% of the time. So the time and effort reporting is our way of certifying that, what was actually charged on the grant is reasonable to the effort spent on the grant. And then it's also our way of having the faculty and staff time commitment, a way of identifying that their commitment to the project has been met. Subrecipient monitoring. This is really a large area for compliance. When we issue a subaward to another entity or university, we're really responsible for the expenses that they're charging to the grant. Before we actually issue an award to them, there's a lot of risk assessments that we need to do to make sure that they are compliant or will be compliant with the actual agreement. As the PI of a project, you're the one that kind of knows what's going on at the other institution more than, someone, say, in our office would. If they're not completing the project, but yet they're sending invoices to you for expenses, and you're not sure what they have to do with the project, as a PI, you can ask those questions of them and say, what exactly is this for, or why am I not getting results, but yet we're getting invoiced for these things. So if there's, different reports that are due and they're not providing those, those are something you probably want to ask before you actually pay an invoice to a subaward. Cost allowability, making sure the costs are allowable on the grant is always an area of concern. Salary is kind of a big area with that because that usually represents the largest amount of expenses on a grant. Timely submission of reports and award closeout documents. Make sure you're submitting a report on time and at all, because there are situations where if a report isn't submitted, it may, stop you from even proposing an award in the future, or may cause other issues for the university as a whole if the report isn't submitted. Unreported program income. The federal government likes it when we're able to generate money as part of the grant. And if it's generated during the period of performance of the award, we have to make sure that we're reporting that to the federal government. And in some cases, most times it's going to be spent on the federal project because they don't want us generating all this money and then using it for a completely different purpose. A lot of times we'll see this more so if it's like a conference grant where you're putting on a conference and then charging a registration fee. So that registration fee turns into program income, which has to be accounted for separately and identified. Their burn rate or spending rate and timing of expenditures. So why this is important is obviously if you're 90% of the way through the grant, maybe you only have a month left, but you've only charged 10% of expenses, there may be a question of, what's going on here? Do we need a no-cost extension? Or why aren't costs being charged to the grant? Or also the other way, if you're only maybe 10% of the way through a project, but you've spent 90% of the budget, it may be a red flag as to, okay, are these costs that got charged to the grant really allocable to this grant? What is the reason for this? Sometimes there's good reasons for that. Maybe you purchased a large piece of equipment that needed to be done in the first month, and it ate up a lot of your budget. So, just make sure that you have a reason that you're able to explain it. And also communicating those things to the program officer if it's out of the ordinary. We know we've heard from other, agencies that say, especially if you're getting towards the end of the project and there's a lot of budget that hasn't been spent and then they're about to award the second year of funding, if they don't know why you have all that budget left and you're not explaining it to them, they have withheld future funding because of it, or reduced future funding, if there's not a good explanation on why there's so much budget available. Participant support costs are an area of compliance. Participant support are more like your training costs, and those costs are always segregated out in a separate grant fund where they have to be monitored separately, and we need to ask for special approval from the sponsor if you need to increase those costs or add more costs to there and reduce from other budget categories. There are a lot of resources for you to assist with the award managing the financial part. There's our GCA staff, Grants and Contracts Administration staff. Each grant that we have a special grant monitor who monitors your funds, and typically there's someone who monitors like all the funds in that agency. So if it's a USDA grant, they have a lot of experience with that. We also do training on the Banner financial system and financial compliance training. We send out monthly reports to the PI. And then we have a website with a lot of institutional information and on our policies and procedures. And then there's the federal agency's proposal and award guidelines as well. When you are preparing your project budget, most of these federal agencies require that the proposal be a good faith estimate of the anticipated cost to fulfill the scope of the work. And those costs are comprised of direct cost and the F&A or indirect cost. So your direct costs are those costs that are easily identified to a project. If someone's working on the project, they're going to be traveling, maybe going to some conferences, purchasing supplies, maybe you have equipment or a subaward. Well, those are all costs that can be directly tied to a project and would be allocable to budget in a project. And then you have your F&A costs. So it's really your facilities costs and your administrative costs. So you'd have a lab or your office. We have a library on campus and utilities, lights. All those costs are needed to run the university and for you to run your project, but it's hard to tie any of those costs directly to your project. Same with the administrative side. You have purchasing, accounting that writes the checks for all the expenses that need to be paid on your grant, as well as your pre and post award support and your departmental office. they all are needed for the university, but it's hard to tie any of those costs directly to a project. So those are more your F&A costs. So sometimes we may say, that's not an allowable charge to the grant because it's more of an F&A cost. It's hard to allocate out to a project, and that's kind of what we're talking about. So when preparing those budgets, make sure, you're charging the direct cost, and then when you're actually get awarded and charging expenses to the grant, it's these same two things apply. Those direct costs are those ones are easily identifiable to a project, and the F&A cost charges a F&A rate, but not directly to the project itself. As a university, we have a negotiated rate done with the federal government. So they take a look at all of our indirect costs, and there's a big indirect cost proposal that is done, and DHHS is our cognizant agency that we negotiate with in order to come out with an indirect rate that can be charged to our sponsored project. And currently, our federally negotiated rate agreement had gone through June 30th of 2018. However, it will continue until it's actually amended. So we just recently, earlier this spring, had submitted our F&A proposal for our next year. However, it does take the federal government quite a long time to actually negotiate it. So we're hoping it by March of 2019, hopefully we'll have a new rate agreement in place. But until then, we just continued to use the same F&A rates that apply here. So for research, it's 46% instruction on campus. Other on-campus services, which is more like your extension or public service, is going to be 34.5. And when we're charging that indirect rate to a grant, it's typically done on what's called a modified total direct cost. So you may have 100,000 of direct cost, but we're not going to charge 46% on the entire 100,000. What we do is take that 100,000 and then anything that's permanent equipment, tuition remission, rental cost, subawards over 25,000, that doesn't get indirect charged on it. So even though you may have $100,000 of direct cost, we may only end up charging indirect on 50,000 of it, depending on what may be modified. When the award is received at SDSU, it goes through his office. They do a lot of the negotiations and make sure it gets signed and approved. And then we work with their office in order to get it in our area and set up an actual grant fund, an account in Banner. Banner is our financial system, and that's the official record for the university. So a unique fund number is set up and assigned, and there's a categorized budget entered into Banner. So in Banner, we don't have an account code saying we can spend this however we want. We have to split out salaries, benefits, travel, and all those different categories. And then when we're setting up that fund, we're taking the routing form that was initially done when you proposed the project, as well as the proposal to make sure we have all the needed information to set up the grant. And then when we have all that information and it's set up, we'll send out an email to the PI, possibly co-PIs if you have any, your department dean, and sometimes your research dean in your college, or your department head, and your support staff, your financial support staff in your department. So depending on who's in your department, they're the ones who are actually going to be charging any of these expenses to your grant. And then also the grant monitor in our office who monitors it after those expenses charged to a grant. So this email is sent out with a lot of the information that's necessary for the grant. We attach the award to the actual email, so you have a full copy of the award in terms and conditions. And really that notification email is your green light or your authority to start spending on the project. In most cases, when we get grants, they're cost reimbursable, so we don't get all the money up front. I know we get asked that question, like, do we have the money? Well, no, but you do have the authority to start spending. We do also have the option for an advanced or at-risk fund. So we use this a lot of times. Maybe you're a sub-recipient from an award that went to another university. However, sometimes it takes them quite a while to actually issue us a sub-award. So there's an option for some of those cases to do an at-risk fund so that we can get an index or fund set up in Banner so you can start, if you're actually working on it, start charging those expenses to the project. Or sometimes, I know we get those requests for if maybe as part of the requirement of the project, you have to do some traveling, so you're purchasing your airline ticket ahead of time, but you need an index or a fund number in order to do that in Banner. So we've had to set up funds for those cases. It does, there's policy out there on Inside State and under our webpage that has more information about that, but usually requires either your dean or department head approval. Some other things our office does is more the after-the-fact review of expenses for financial compliance. So we're looking at costs and see if they're allocable, allowable, and reasonable. If we're not sure why something's charged to a grant, we'll likely come back to the PI to gather more information or ask him to move it off if it isn't allowable. We invoice the sponsor. Grants are cost reimbursable, so we have to submit an invoice or request a drawdown in some cases to actually get the money at SDSU after expenses have incurred. We do financial reports, manage the cash and the receivables. So if you happen to get a check from one of your sponsors, make sure that gets forwarded to our office so we can apply it to the grant. We assist with the monthly certification. Loretta Gross in our office really helps with this. The Board of Regents policy states that the effort report will be done every month, so the actual effort report will be created every month. It usually happens after payroll, and she always sends out notices as when they're actually ready to certify. And if when it's time to do that, if it's your first time, she kind of has a little PowerPoint or something she can go over with you, because sometimes depending on if you're a new PI, you need to have a couple other things done in the system in order for you to actually certify. So she always assists with that. Assisting with tracking and documenting cost share. Cost share is the portion of the project that isn't paid by the sponsor. So if you had a grant which requires some type of cost sharing or matching, we need to make sure that we're documenting that in Banner, if it's a cost at SDSU, or if it's a third party that's providing that cost share, that we have that documentation in the grant file so that we can report it with our financial information and the financial reports that we are submitting. Our policy is, a lot of times if it's not required, let's not propose it. Because if you are proposing it and it's not required, we need to make sure we're meeting that cost share. And if for some reason at the end of the grant you can't meet the cost share requirements, then we may need to go back to the sponsor and renegotiate with them or see what can be done. We may have to decrease some of the award costs if we're not going to be able to meet our cost share. Processing, budget adjustment, amendments, extensions to existing grant awards. We work with ORASP on that. As the authorized official, they're the ones that need to approve it. So we make sure that is requested if needed and approved. So then the changes are actually made onto Banner and sent out to the PI as well as anyone else who needs that information. We provide monthly reports and payroll and operating expenditures that had been charged to your grant. Every month, usually about the second or third business day of the month, we'll send out a PDF for each separate grant fund you have showing, here's the grant fund, some basic information about start and end date as far as what's on the actual award. May not be what was proposed, but what's on the award, the authorized budget, and then, where you are at spending as well as all the expenditures that had posted that month. So as a PI, you really need to make sure you're reviewing these expenses to make sure they're, obviously allocable, allowable, and reasonable. And if you notice that, it kind of goes two different ways. If maybe someone should have been paid on the grant, but they're not being paid, you want to make sure to work with your support staff in order to get that person paid. Because when we send out that new fund setup email saying, here's your award, and you had proposed these people to pay on it, well, that doesn't automatically move their salary onto this grant fund. You still need to make sure you're notifying the support staff who actually, does a fund source change to get that salary paid on the grant. Then two, if you notice there's expenses on there for something that shouldn't be charged to the grant, you want to make sure to notify your support staff to have those expenses moved off. Maybe it should have been a different grant fund. Maybe it's a completely different fund to begin with. It was a complete, there's lots of indexes on Banner, so sometimes typos do happen. So make sure you're looking at those expenses. We also provide quarterly information for award and proposal reporting in departments with the F&A recovery report. So we help with issuing subaward and subrecipient monitoring. There, like I said, there's a lot of things that go into that as far as risk assessment and making sure that they're following the rules. And we provide assistance on the rules and regulations for the PI, provide additional assistance with banner training, and then also assist with rate development for service centers. So there's some projects on campus where maybe there is a service center out there, so we're just take a look at all the costs in that service center to make sure that the federal government really isn't being charged more than their fair share. And that's kind of why we have a service center policy. But Bobby Markham in our office assists with that and can go through that if needed. We assist with award and project closeout in complying with our records retention requirements for the financial side, and act as a liaison for any audits or of the sponsored research, any financial audits. Fiscal responsibilities for the PI. On the behalf of the university, the PI is responsible for both the fiscal and technical management of the project in accordance with the terms and conditions. So you need to be able to make sure you read and understand the actual terms and conditions of the awards. Make sure you're following your approved budget or budget categories. Like I said earlier, the budget is a good faith estimate of the project cost. As reading the terms and conditions, you'll realize most sponsors do allow you to vary on the budget. Sometimes 10%, sometimes 20% or more. So that's why reading the terms and conditions is needed. But if you follow your approved budget, you shouldn't have a problem. Or if you have changes with your approved budget, maybe someone was going to be working on the project, but you couldn't get them hired, so you have to go a different direction and maybe issue a subaward. Those types of things would need the prior approval. Be familiar with the period of performance, the start and end dates of the projects. In some cases, these can be extended into sometimes cost after these end dates aren't allowable to be charged to the grant. And then also work with your department support staff to ensure all the expenses and banner are correctly identified and coded in a timely manner. Because most of our grants do have a start and end date, we also have timelines on when those financial reports need to be done or drawdown request needs to be done. So if you're charging maybe a travel expense 6 months after the end date of the grant, we had to get our financial report in maybe 90 days. So there is a chance we may not get those funds if they weren't charged to banner in a timely manner. I talked a little bit about the burn rate or your rate of spending. Monitoring your expenses on a monthly basis to make sure that over or under can be addressed before the end of the grant period. In some cases, those types of things are okay. Communicate with us if you're off track or additional information is needed on why you may be overspent in a category. Subrecipient monitoring, so with subawards, we need to make sure that you're approving their invoices within 30 days. However, if you have a reason for maybe not approving it, make sure you're notifying us so we can document that. Because obviously if you have questions about what they're invoicing us, we want to get those cleared up before we pay them. Review the detailed monthly transaction report that's provided to you. With the grants and contracts and uniform guidance, one of the certifications that is required really goes on to say all expenses are true, complete, and accurate, and for the purposes and objectives set forth in the award documents. Goes on to say, I'm aware that any false, fictitious, or fraudulent information or the omission of any material fact may subject me to criminal, civil, and administrative penalties. So when they redid the uniform guidance a couple years ago, they did change some of the statements in there to make it more stronger. So if an individual is, doing any type of fraud, waste, and abuse, the federal government can come after them as well as the university. So that's why it's important to make sure that costs charged to the grant are correct. Be aware of the requirements listed in the award, such as cost share, attendance in any annual meetings, or treatment of program income and participant support cost, due dates for progress reports or any other type of monthly reports. And then at the end of the project, make sure you submit any closeout documents that are needed and follow the Board of Regents policy for any retention policies, and notify our office in the event of a financial audit or financial review of the project. Just wanted to give you a little information on Inside State. We are under the Finance tab. There, if you go under Finance in Grants and Contracts, is how you actually get to our webpage. But if you need any assistance, feel free to contact us. And a lot of the information we send out, we have the grant monitor's name, but really you can contact anyone in our office to actually assist you.